They want to.
Alan who?
Alan Hall across the street.
Oh. Well, this room's much nicer than everything, though. It's certainly more convenient. Hey, look at this, you guys. My other Father's Day present. Yeah, finally came. Yeah. It says number one Papa. Yeah, and that's it. Yeah, and Red Sox. Not the Boston Red Sox. Kiwi Valley Red Sox. Yeah. Anyway, and then you already saw this one. Yeah. I was pointing out to my principal students that women go blind as they get older. That's Laura. And she's married to me. Yeah, you know. She was blind when she was young. Yeah, anyway, so. Anyway. She said she thought I was going to have a lot of money. She heard I was a doctor and thought I was going to be rich. Oh, well. Yeah, so. That's that one up. I am a doctor. Don't have any money. Okay, anyway. Wrong head doctor. So are we recording this?
Yes.
Already? That's great. So I heard about my grandkids on there again. Remember that? How many times that happens? Oh, for crying out loud. That thing has come up every single time we load this, and it says something about, please don't show this message ever again. I'm going to hit it, and it's going to keep doing it. So there's a little glitch there, too. Oh, where's mine? Oh, there we go. We got it. Go away. Oh, that's nice. And now, I learned in the well, in this class it might work. Learned in the other class it was better if I did that first. Do that. Okay, all right, so good. And I thought we'd just do a problem, maybe. Okay, you guys remember way back when in 101 and then briefly in 211 we did cash flows, right? And you remember how to approach this thing, which I think is really simple. And there are a few new idiosyncrasies in this chapter. We get some real things, right? But yeah, it gets long. It's all the same stuff. What do you think of the worksheet? Just read this up. What do you think of the worksheet?
It's like a lot.
It's like an awful lot of work to do what you could have just done by putting it on the statement. I prefer just doing the statement directly and doing T accounts when I need to straighten it out and then figure out what's going on. And just to think through it, you know, where does this go? Where does this go? You know, what are we doing? We're explaining the changing cash, right? Beginning cash, ending cash. That's all this is. How many journal entries do you need to do a cash flow statement? Exactly how many? In addition to what you did to a balance sheet income statement. 0. None. All you have to know is what journal entries you did in order to get your balance sheet income statement. You know that, you're going to pay. So this is really quite simple and very mechanical. Now, I told you in principles probably in first intermediate, I don't think cash flow statements are very valuable. It's fitting a little bit. I think they're really valuable if you use them in addition to the income statement and the cash, or the income statement and the balance sheet, right? They give some additional insight, right? But if you use them first or instead of, it's a disaster. Everybody understands cash in and cash out. Your clients are going to know what cash is. They're not going to have a clue what goodwill is. What would they rather use? Something they know, except there's no value if you don't know what's going on in terms of accrual basis, right? So, by the way, a lot of the things when you do these statements, if you want to use a direct method, all it is converting from accrual to cash. That's it. Instead of it being sales to customers, it's cash received from customers. It's easy to get cash received from customers. There's nothing to it, you guys. Okay? There's nothing to it. You know what the interests are. Oh, by the way, the authors, I'm sure, say, right, in this chapter somewhere, that when they do in the principles book too, that companies really lobby for, I know they say they lobby for it, but they're rationale. They lobby for the indirect method, and they say the rationale is easier, it's faster. Nonsense. We can easily do direct or indirect. Why would you not want to do direct if you do not want to get additional information? You think there's additional information in direct, and if you don't have to do it, you don't do it. Okay? It's those folks. I think it makes absolutely no difference. You just do the direct or indirect. I don't think it's really you need additional information because I could calculate what it is anyway. You tell me what the beginning balance is in accounts receivable and the ending balance in accounts receivable, which you do on your balance sheet, right? And you tell me what sales are. I can tell you what cash receipts are. Can you? I can get it. Pretty good at that. Okay, I can do the same thing with accounts payable and do it with inventory. I can trace any of that stuff through. So what are they not telling us? Or who are they not telling? I guess they're not telling people who are relatively naive and don't really understand how to use a financial statement. They're not telling them and want them to still go ahead and invest their money. I don't like that very well personally. I think it should be the direct method just because there's a tiny bit more information. On the indirect method, you show the change in accounts receivable. I think I already know the change in accounts receivable without you guys computing it and writing it down on a piece of paper. I can look at the balance sheet and see the change in accounts receivable. It's worthless information, right? It's not adding information, it's data, I suppose. So what we do is we take the operating section of the cash flow statement and make it kind of redundant, right? I really prefer the direct method. So but in this class, oh, by the way, what do most companies do? Indirect. So almost all of them do indirect. So therefore, what do we have to learn in principles? Indirect, because that's what the business people are going to see. We want you guys to know the direct method too, because some companies do that, obviously. And I think we should be encouraging people to do it. Because, makes more sense. It's a little more information. Why not do it? Okay? So I would encourage you to do that and sort of spread the word slowly, maybe get adopted. So, but don't let anybody ever tell you it's more work. Oh, come on. You have a computer to do anything, right? So, by the way, we have a whole bunch of reports we have to do based on that stupid meeting yesterday. Yeah. You gotta do stuff. You gotta do report on this. Yeah, okay, anyway. I promise you do it, tomorrow. Yeah, so like that.
Thanks for letting me know.
Yeah. No, I'm kidding about tomorrow. I promise you do it before you quit, before you get this worked out. So you're on the hook for that. All right, anyway, let's try 23A. You got a balance sheet accounts there. On 23.7, it looks like a real balance sheet, all but it's the same information, right? It's in the right format. And then they give you some additional data and give you an interest rate. This looks just like stuff we did in principles on. Only we'll do a little bit more, and we'll also do direct and indirect, okay? So what should this statement look like? How will you approach this thing?
Which one?
Let's do problem. Oh yeah, problem. 23A. It's got direct and indirect method both. Let's crank through it. Let's look at it. See what a statement would look like. Okay, before we start, what do you put where on this statement? Here we go. Back in principles again. This will be useful for you to sort of jog your memory, maybe. Or you can tell me if I'm wasting our time. I'm always wasting mine, so I don't worry about that. I'm concerned about yours. Did you guys know these are consisting of current assets and non-current assets? Did you guys know this is current liabilities and non-current liabilities? Did you know that equity is non-current? Yeah, okay. So where do you put it on the cash flow statement? 3 sections of the cash flow statement. Oh, by the way, do you know that net income goes into retained earnings? Right? Dividends also come out of retained earnings. You guys aware of that? Okay, net losses reduce retained earnings. Okay. All right, anyway, where do they go on the cash flow statement? We put the company name at the top of the cash flow statement, statement of cash flows, the cash flow statement, and then we put for a year into time, right? Okay. So, gotta have something easy in this class, so that's good. What do we do? What are the 3 sections? Goes at the top? Yeah, these are upside down, right? I'll remind you what I mean by that in a second. We got operations, operating, right? Activities. And then what? Investing. And then what? Financing. And what we start with, of course, is beginning cash and work down to ending cash, right? There's a variety of ways that you can set up a statement, right? Okay, that's always what it is. We're looking for the change in cash. Okay, if you write down every change in the balance sheet except for the change in cash once and only once, and you add it all up, what will you get? Seen as debits or credits. Change in cash. That's all this statement does. Keep that in mind always. If it starts getting complex and getting away from you a little bit, relax, back off. Really early in my career, I mean, almost the day I started, went to Arthur Anderson, and did I tell you guys this when we were doing cash flows? A senior came into the bullpen area with So with a phone book. Anyway, this guy comes in, and he, I had a phone numbers. Anyway, he came in and threw down a set of work papers. They're by hand, in a great big pile of paper. Throws it down, and he says, "Who knows how to do a cash flow statement?" And there were all these guys from University of Washington, which is a really good accounting school. They're all smarter than those of us. I was from UPS, University of Puget Sound, not United Partners, so University of Puget Sound. And then there was another fellow who was from Brigham Young. He was pretty smart too. Anyway, and then everybody else was from University of Washington. Like I used to look at that. And so anyway, comes in and says, all these guys are paying for me. Oh yeah, I know how to do that. And they started swinging to him what the APD at that time said, right? It was a statement of working capital before the statement of cash flows came out. It's simple. Anyway, he says, no. I read the APD. I know what it says. I want to know how to do one. And me and the guy kind of look at each other and said, how to do one? That's no problem. And he said, then do it and let me watch you. Okay, and everybody stood around. The two of us did. Absolutely nothing to it. It's like doing a cash flow statement now. It's a joke, right? Competition's not all going to think it's a joke. You will. It's really nice. Guess what happened with that scene that week? Both of us were on this job. None of us got invited. Why? We didn't know what the APD said what we did, but we didn't just know that. What did we know? How to do it. So this is really mechanical. It's really simple, but it's really valuable. You can do it. Can you guys put together a balance sheet? Yes. Can you put together an income statement? Yes. You know what's supposed to be there? Do you get everything perfect? No. Can you look it up? Yes. Can you ask somebody who knows? Yes. Relax and do it, okay? People like our students because they are humble, because we beat you up so much giving you horrible grades and stuff, right? Tell you you're dumb shits, because you are, right? And you know that when you go to work. You don't know anything, do you? You're out there doing those internships with people who really know what they're doing, and you don't know anything, do you? It's okay. That's normal. Nobody knows anything. Your boss doesn't know anything either. There's all kinds of stuff they don't know, right? And they know that. So you just keep going, right? It works really good, right? But get something done. Get something done. And if somebody asks you if you know how to do something, you know how to do it, show them. You know how to do it. Take advantage of the opportunity. It's unbelievable. He and I didn't go back to the office again. It's fantastic. The other one that really worked was, I told you this one too. Went to a partner's office and he asked what my plan was for passing the CPA exam. He says, I have 3 parts done. The other part I'm going to take real soon, it's like right after staff training for auditing. I was doing the auditing section exam. Worked out really good. I got 75. Came back a day early from the training school and I got 75. Well, I didn't study for it. I'm going to audit staff training, got our training, so I should be able to pass it. I made it. It's okay. You are looking for somebody that's a member of the 300 club. You know what that is? I got 75s on all 4 parts. Do I know how many seconds? I don't mean minutes. I don't mean hours. I don't mean days. How many seconds I studied for the CPA exam specifically? 0. You're studying now, you guys. Why would you study after you know it? Now, I don't recommend that strategy. But I was talking to Dwight Zula, the Pacific Lutheran, who had on his wall, I tell you that, the little plaque, that he was the highest score in the state of Illinois. He went to the University of Illinois, the biggest accounting school in the world, right? He went there, he got the highest score in the state of Illinois. And I'm like, oh, wow, Dr. Zula, that's really something. He says, yeah, that's a piece of shit. And I said, why? He says, I spent a year of my life studying for that thing. What you're going to do is you're going to go take it, pass it, and you're going to work that year and get paid and get promoted. So he bet me a bottle of booze. I didn't know how much booze cost in those days, right? But I'd been to his house and he'd given me this liqueur that was really good. And he says, I'll bet you a bottle of this stuff. And he was from Europe somewhere, Scandinavia somewhere. And too long. Anyway, he says, I'll bet you a bottle of that whatever you want versus that's what I want, fine. And I didn't that you get at least conditional credit. So I went and took it without studying for it. Yeah, you don't do this either. I was too cheap to rent a hotel room. I didn't have any money. I was driving from Tacoma, Washington, where I lived. I go to Seattle. Every day, the exam was in 2.5 days, like 10-hour days of taking exams. 2 of the days, then half a day, 5 hours or something the other day. We were tough. Anyway, so I drove back and forth, right? Lucky I lived through it in rush hour. So a few hours driving, right, each way too, in rush hour. In addition to sitting there for all those hours, just brain dead, right? I was sure I had passed absolutely nothing. I didn't have much for a hotel room. Anyway, and there were people sitting there, by the way, taking the exam with coffee and soup. They'd stop and eat crackers and eat soup, and I'm just frankly writing, sweating, and dying. My hand hurts, I got all these pencils broken and stuff, and, dinosaur age, right? We were still right then. And I got 375s, you guys. It cost me a fortune. I have no idea, but probably in today's dollars, $50 or something. But I thought it was a fortune, right? I bought him a bottle of booze, and he just laughed at me. And he says, "Why you took long for it? Geez, now you have to go back and do it." And I'll tell you what, I was taking auditing, and I was taking theory, and I was taking advanced accounting all at once so I could graduate in 3.5 years. Don't you listen to this dumb shit. Yeah, so, because you're trying to do that too, right? You're going to flunk it. Anyway, so, I was taking all that stuff at the same time because, well, I needed to get done and go to work, and I got a job, and so I went and did it. CPA exam is not a big deal, you guys. Get ready for it and go do it, okay? Now, my strategy for you is, for crying out loud, get a CPA review manual online thing. Don't do that for it. Even if somebody's paying for it for you, don't do it. Why would you study stuff you already know, right? Take a practice exam and see if you're scoring 80% or above. And if you are, go take it and pass it and go on with your life. Now, we would love it if you got the highest score in the nation on the CPA exam. But if you spend a year of your life doing it, I'm going to think you're an idiot. Don't do that. Because probably if you get the highest score in the nation, you can pass it right now. Right? Financial, we're getting close, okay? You guys are getting close. You take the auditing class here and you get an A in it, go take the auditing section. Don't study for the CPA exam, go take it. You get a B plus, probably just go take it. A minus, yeah, definitely just go take it. Got the idea? Okay? So, well, unless we hire somebody that's really a piece of cake, and then, oh well, learn it on your own. No, we're not going to do that, are we? Okay, anyway, so where do you put these things? So this is a nice example, right, of stuff that happens in your career. Just relax, you guys. You're going to be fine. You are really well prepared, and continue to be humble. Oh, the other thing they say is they really like our students because they don't think they're going to be partner in 2 years. When you hire somebody from IU Bloomington, apparently they do, because they're gods, gods, because they went to school there, and so then they have to feed it out, right? So, what's that?
One of my friends from high school is really years.
Did she go to school there?
No, it's a guy, and he's a double week on IS like me.
He's so important. They should make him a millionaire
Oh, you
tomorrow.
have no idea.
I hope he's going to inherit the $1 million tomorrow, so he can be a millionaire tomorrow. Okay, otherwise you don't get it. Okay, anyway, so funny how the world works. You know what? Nobody ever asked you what your GPA is. Nobody has ever asked me what my scores were on the CPA exam. Nobody cares what my GPA was. My GPA in my PhD program, you guys, is a 3.9 something. You know why? They don't give anybody anything but A's. I screwed up a class to get it down there, right? And not really, I just kind of blew it off so he could print for my comps, right? And it pissed off the professor, so he gave me a B plus, right? That's what happened. That's my lowest grade. What happened in the last year of my PhD program, I was doing my coursework, right? It's 3 years of coursework at Oregon. It went forever. Anyway, 3.5. Anyway, the guy that took over the PhD program, who ended up being the chair of my dissertation, Terry O'Keefe, he says, "You guys care if we give you grades?" Everybody's saying anyway, screw it, right? And because it was all about passing your comprehensive exams and getting your dissertation done. That was not guaranteed. At Oregon, at least 50% of the people who started the PhD program did not finish. Right? They handed them a master's degree and said goodbye when they washed out. So yeah, you didn't pass your comprehensive exams. And so yeah, it's tough, but don't ever do a PhD. It's stupid. CPA exam you can study for and pass it. It's not subjective. Gee, maybe you're done or maybe you're not. Okay, so the only people who should do a PhD are the same people who insist on climbing Mount Everest because it's there. There's not any reason to go up there and back down, right? It's ridiculous. PhDs do the same way. My dad thought I was crazy. You do a PhD so that you can make half the money you used to make before you ever started teaching. He's like, what? What are you doing? And you're jumping through all these hoops for these people? No, stupid. All right, anyway, so I can hang out with you guys, I guess. All right. Well, but look at me. I'm old. I still make money. I don't have to do anything. Yeah, it's all right. It's all right. Maybe you should do a PhD. Okay, anyway, pays off someday. Or I could have stayed in public accounting and been retired and rich. I should have done that. Yeah, this was a big mistake. Okay, anyway, where do you put these?
The current assets and current liabilities going operations.
Yeah, current assets, why? Changes in them. It's just the changes, right, guys? For those of you who haven't thought about this for a while, it's just the changes. Why? Because there's millions and millions of transactions in accounts receivable, accounts payable, right, guys? Inventory, prepaids, accrued liabilities, right? So we just put in the changes because there's just way too many transactions, so we won't be increasing and decreasing. That's it. Now, that's the indirect method. What about the direct method? Calculate how much you paid your customers, how much you paid, or how much your customer paid you, rather, how much you paid your vendors, that kind of thing, right? Okay, so that's it, okay? Anyway, so they go there in either event, right? That's how you're going to calculate those amounts. All right, what else goes into operations? The net, okay? So clearly, net income or net loss. What else goes in there? Absolutely nothing, right? There'll be some non-cash items that are in the income statement, like depreciation, amortization, so adjust for gains and losses, right? Because we want to put the gains and losses down here. Everybody staying with me? You know this, just bring it back. And so when you're working these problems, so what? Okay, then what? What goes under investing when you invest it? Yeah, the non-current assets go down right out there, okay? And you show both the increases and decreases, why? Because there are very few transactions and they're huge, right? So it makes sense. Of course you do that. Okay, what goes under financing? Non-current liabilities, and you're going to show both the increases and decreases, right? Why? Because they're huge. You show a bond, you pay off the bond. I mean, come on, they're huge. What else goes down there? The equity, right? Both the increases and decreases. Why? Because dividends are big. Issuing stocks is big, right? And there aren't very many transactions. Everybody good? Have we taken care of virtually everything that's in the general ledger? Yes. So if you write down everything but cash here, and then you write, and then you add it all up, and you add it to the beginning cash, of course, it's your ending cash. That's it. If you've got it in your head, this is no big deal. It's just what were the journal entries, okay? And so no matter how complex it gets, use this stuff. I said this is upside down to remember the order they go in. Why is it upside down? What do you do when you start a business? The equity holders put money in. If you don't start a business, right? You're going to borrow money first. Okay, then, unless your parents are throwing back in, and that's really an investment, I suppose. Okay, then what? I probably don't buy assets yet. I probably do what? Go get some long-term financing so I can buy the assets because I don't want to put all my money in. I want to get a bank to help me or something, right? You issue bonds, not big. Okay, sure. Okay, I'm going to be big. All right, so yeah, I probably get long-term debt. So I probably do this first, then this, right? And part of getting the debt is doing what? Buying those assets, right? So that comes next. So it's in reverse order. I don't know why, but it is. And then operations is the last thing you do, right? You certainly don't sell anything until you have something to sell, right? Buildings, equipment, and so on. And then you're going to sell inventories. You buy the inventory and for prepaid, do whatever you have to do, right? Buy inventory account. That's the business process. It's just business. So this statement just reflects what's going on in business. Okay, so we want to find what problem was it? 23. This is much faster. Way at the end. No, gotta have it. Computer doesn't like me. See why you don't get along with computers? They're way too slow. Oh, there's one. Yeah, let's look at what they did. Let's talk through it. Before I would not use a worksheet. You guys feel free, but there's no way in the world I would. I just don't think it's worthwhile. By the time I prepare the worksheet, what could I have done? Done the statement. Why would I prepare a worksheet? When would I ever prepare a worksheet for anything? When it does what for me? Chapman's the one we're doing, isn't it? Come on.
Go down. The 23.
Oh, it's 23.8. I'm sorry, I put 23.7 as Chapman. Cancel whatever I did there. You still right? There it is.
You can keep going. That's 23,700.
Oh, I did it again.
Oh, what?
Don't just disappear and go to the last problem, okay? All right, so we're gonna do the direct and the indirect method, both, all right? What are they doing first here? What does that look like to you guys? Why is it direct? Yeah, because you're figuring it out. Okay, so what's gonna change between the two methods? Only the operation section. The others are exactly the same. Everybody knows that? Exactly the same. So if they ask you for direct, go direct. If they ask for indirect, just show the changes. Okay? Show the net income changes. All right, so here we go. How would you find your cash receipts from your customers? So it'd be company name, right? Statement of cash flows for the year ended, and then you start with cash flow provided by operating activities, right? The first section. How are you going to do this? How are you going to get to your cash received from customers? What we're going to do if you do the indirect, what account would you be analyzing here relating to this? Accounts receivable. So what we could do is we could take accounts receivable from the problem. Tell me what the beginning accounts receivable is.
51.
How much?
51.
51,000.
Cash.
Well, that's cash.
130.
130,000. All right. See if I got real big. I did that. No. Okay. This is 130,000 beginning. What's ending? 155. If I was using the indirect method, what would I show? 25,000 increase in accounts receivable, which if receivables went up, I would have less cash cards, so I would drive this one. That's it, right? Okay, what am I going to do here? What got added to accounts receivable? Credit sales, everybody agree with that? That should go there. And then what comes out? Cash received. So if I wanted to get cash received from customers, how hard is it? Oh, come on. So what did they tell you in the problem? Sales revenue was how much? 950. Are you kidding me? That's what their little calculation is. 130 plus 950 is 1,080,000, less 155 is how much? 925. I'm actually going to let you do stuff like this and give you points for it. And they will on the CPA exam too. Isn't that generous? There's an easy thing. Remember when we did cash to accrual conversions and people couldn't do it? You can now, can't you? That's a joke, isn't it? Okay. Right? That's what we want to get to. Like, do it and do it and do it until you get it down. Okay, so good. Yeah. You guys learned by now not to do brain dumps anymore? Right? Well, you haven't. I've seen you in action recently, but yeah, okay, yeah, it's good. You know I do them all the time, so yeah. All right, what about the suppliers? What accounts are you analyzing? It's just accounts payable. And typically all the accounts payable, and most companies do this too, the accounts payable are really the suppliers, right? And then accrued liability for everybody else. That's really nice if they do it that way. If they don't, you have to separate a little bit more, huh? And you might have a whole bunch of accounts you're working with. Does that make sense, guys? So big deal. It's just replicating it over and over. So what do we know about accounts payable? What's the beginning?
60.
Two,
Just 60.
260? Accounts payable?
60,000.
Oh, 60,000. What's in?
66,000.
It looks like you bought 6,000 more than you paid for. True? Right? So then what else do we know? Do we know purchases of inventory? Did they tell you? Or do we just know cost of goods sold?
Which that costs so much.
Oh, we just have cost of goods sold. So what do we need? inventory with it? You think? Sound good? What was beginning inventory?
61,000.
What's ending inventory? How much?
70,000.
So it looks like we bought 14 more than we sold. Okay, right? What's cost of goods sold?
600,000.
It's a debit, right? 600,000 here, 600,000 here. Everybody agree with that? Way we can do it, right? We can write a journal entry and figure out what it must be. So how much must you have bought? 614, because you bought 14 more than you sold, right? I know that one. That's debit inventory, credit what? You guys agree with that? I started with 60. I bought 614, or I borrowed 614, and now I owe 660. I owe 66. How much must I have paid? Look at that. Easy. Citizen you sleep. Pretty much. Relax. You get what you need, right? Okay. This is really, really nice skill. Really nice skill. Not so that you can do directing out just cash flow. Probably not going to do it very often. Although, you know, if you need to, and you're the one who knows that, that'd be nice, right? But what's the deal? We do this stuff all the time. All the time. Look at what's wrong. You know, what's wrong in an account. Okay? Being able to go from cash to accrual and accrual to cash is really valuable. It's driving us nuts because we're trying to do cash basis for a tax return. Gradually moving to accrual basis for the financial statements. We should have just had it. You're just not allowed. Just have to be far better off. Because people say, no, that's the cash, but what happened? Really? You know, this cash doesn't really reflect what happened. Really? We shouldn't just have an accrual basis income statement and have a cash flow statement. Done. So, nonprofits might be crazy because of that. Okay, anyway. So what about the next one? How about operating expenses? What's going to happen there? What account you going to work with on operating expenses? I could add a sales account too, by the way, there, of course, right? What about operating expenses? What's going to happen? And you know, that could be a whole bunch of different accounts, right, guys? Operating expenses, salary expense, rent expense, you know, it could be a lot of different things, whatever you want to show on your cash flow statement. So what do they do for operating expenses? I want to have cash going out for operating expenses, right? What's that going to probably be? Typically, we debit operating expenses and credit what? Anybody? You know what's really sad about this is I'm telling you stuff that I know you know, and when I ask you, you're kind of like, well, let's see, what was that? Come on, get past that.
Accrued liability.
Yeah, free liability. Just know. Come on. Right? That's where we want you to be. When you go to work, just to know. You don't even know how, where it came from. And are you remembering that, or are you figuring it out? I don't have a clue. Oh, I do with me. I don't remember anything. I'm figuring it all out as I go. You know that, right? Okay, so, you know, I'm making it up every single time, and it's always the same. It's amazing how that works. Okay? That's because you're figuring it out based on a simple little system. Debit operating expenses, credit accrued liabilities. Absolutely it is. If they use accounts payable for that, it's a little bit annoying because it's all blended together in accounts payable and you have to separate it, right? But if they keep it separate, it's nice. So I like it. I set up my nicely separate. Like that. Debit operating expenses, credit accrued liabilities. And then what happens? You pay for it. Anybody want to pay for it? Okay, and be cash going out. So what do we have? A beginning balance and accrued liabilities, how much is that? They have one?
I don't think they gave us one.
They must have given you something. Did they give you some sort of payables?
Income tax.
Only income tax? How'd they get their operating expenses? They give you the expenses? That's sad.
Oh,
They just gave us
income
250.
from operations.
Okay, operating expenses includes depreciation expenses, liability expenses, 250,000.
So we know what the expense is
Oh, okay.
250 total, right? Okay, and it includes what? So we got this instead, I apologize. This is 250. And what did it include?
Depreciation and bad debt.
Is included in there. So they don't have it in here, it's in there. I guess I don't want depreciation expense. What do I want? Accumulated depreciation. Instead of crediting accrued liability, they credited accumulated depreciation, didn't they? That's what that would have been. So accumulated depreciation, how much does accumulated depreciation go up by?
They have two accounts, equipment and buildings, so it's like a net.
Probably be both of them together. Did they say they sold any equipment?
And 60% depreciated, so that's kind of a pain. So it includes it. Do they have depreciation expense on their income statement?
That's included in the operating.
Oh, that's kind of a pain. Yeah, that's kind of a pain.
But anyway, it's included in there. Oh, I can't do it this way. I'm gonna make you back into it, aren't they? Operating expenses less depreciation expense and bad debt expense. 250. Oh, we gotta calculate the 22. Ah, okay, yeah. And then we gotta calculate the income taxes. We can do this way. We're gonna have to back into it. We're gonna have to take out bad debt expense. Do we know what bad debt expense is yet?
How do we get bad debt expense? They didn't give you that either. It's harder than I thought. Where do you get the bad debt expense? Do we have an allowance for doubtful accounts? They said there's no write-off of uncollectible accounts for the year. And do we show an allowance for doubtful accounts? Yeah.
So if it went up by 2, there's no write-offs. What's bad debt expense? 2. So that's where they got their 2 for bad debt expense, right? Where did they get that 22? You're gonna have to add up the 2 depreciations, but what are you gonna have to do? Analyze the depreciation account first, right? Okay, so we'd have to do that first. So before we can do this one, let's get another sheet, we'll come back. Before we can do this one, we're gonna have to figure out accumulated depreciation. You know what the 2 is for bad debt expense, right? But what's the depreciation expense? What do you know about those accounts? What do they have? You have equipment, right? And accumulated depreciation on that separately? Is that right? And then we have buildings. Well, this was kind of nice, it made it a little harder. And accumulated depreciation on that one? Okay, what are the balances in equipment beginning and
48,000 beginning equipment.
okay. Ending?
70,000.
Okay. Did they tell you how much equipment they purchased? No? Did they tell you how much they sold? Yeah, how much did we sell? 10,000 was the cost. So what I did was I credited equipment. So I used that. Did they tell you how much accumulated depreciation was on it? It was 60%, right? So accumulated depreciation is 6,000. I'd use that. Did they tell you what they sold it for?
So there's a loss
And there's a loss.
Oh, they said they have a loss of 3. You can see it on the income statement. Is that where it is? Cool. How much cash did they get for it? $1,000. What are you going to put on your cash flow statement for cash received from selling that asset? 1,000. Right? Everybody agree with that? Oh, okay. So good. All right, so that made accumulated depreciation go down by 6. What was the beginning balance of accumulated depreciation?
14,000.
What's the 14 for equipment? What's the ending?
21,000.
How much is depreciation expense, you guys, that went up by 7? For this one. It's going to be debit depreciation expense, right? And credit accumulated depreciation on equipment. Everybody agree with that? There we go. Okay? How much must it have been if they took 6 out and it went up by 7? 13? Is that right? I think it's that. Yeah, that's this entry, isn't it? So I know what the depreciation expense was for that one, right? What's building? Beginning?
28,000.
Ending?
37.
See how T accounts, when it gets kind of complex, are really handy. 28, that says, to 37. So it went up by 9. Did they sell any? So how much did they buy? 9. That's debit buildings, isn't it? Right? So we purchased buildings for 9. How much equipment did we purchase, by the way? It went from 48 to 70.
So I think accumulated depreciation that's the balance. The actual.
Oh, 28 and 32 is over here?
That's the.
Oh, I'm sorry. Messing me up. Okay. Probably keep doing this to credit. Sorry. Leave that stuff. But none of them were sold. So this entire increase of 4 is what? More depreciation expense, right? 37? Jeez. If I keep this 10 exactly straight, it will do a better job. This is 37.
The actual building account is 145,000 beginning and ending, so we didn't buy it.
Oh, we didn't buy it. This one's 145 and 145, and it didn't have any sales, so we also had no purchases, right? Okay, and this would be what? More depreciation expense, accumulated depreciation, right? By 9. So really this is 22,000, right? That's a 2. Okay, that's the one on there. 22,000. Okay, and let's just put them together. Accumulated depreciation is 22,000 is their credit. Put it into blanks. Okay, nothing there. How much happened here? How much equipment did you buy? 48 less 10 made it 38, and now it's 70. How much did you buy? 22? All right. 38 to 70. 30. Debit equipment, credit cash, we assume everything ran through cash. Although it could be an increased debt, right? It could be a non-cash transaction. You put it as a non-cash transaction. So that's probably debit equipment, credit cash. So we want to get all of these things on the cash flow statement, don't we? Where do they go? If I am doing the indirect method, what's going to happen?
Add back to it.
That loss has to get added back. And that depreciation expense has to get added back, right? And then, but whether I'm doing indirect or direct, what am I going to do? I'm going to show under investing activity 1,000 cash coming in, don't you think? And I'm going to show 32,000 cash going out under investing activity. We just found all that stuff, didn't we? Just like that, okay? Just by analyzing a few accounts, all right? If I am direct method, though, what's going to happen with all that stuff? Depreciation just gets taken out, doesn't it? So what did they do to get their operating expenses? They gave you your total operating expenses, did they? Of 25,000. How much depreciation do we think there is? 22. They subtracted it. And how much did, they wrote up no bad debts, and the allowance went up by 2. So they must have debited bad debt expense for 2 and credited allowance for doubtful accounts for 2, right? So what you've got is you've got the 250 less 22, which is credited to accumulated depreciation instead of cash, less 2, which is credited to allowance for doubtful accounts instead of cash. And the amount of cash that must have gone out is 226, right? Let's go back to this then. Nope, it went plus. I need to go back. Could we have done it here? We have done it here instead. I know the operating expenses. I now know I got credited to accumulated depreciation and the allowance, right? So you could have put in, right? What was the allowance at the beginning? 8? And it ends up at 10 at the end? And we know nothing was written off? You guys see what I'm doing? So we could have done it this way. 2 there. Okay, what was the accumulated depreciation if you add the 2 accounts together, which might be a good way to do it, huh? What was the beginning accumulated depreciation?
42.
For the 2 added together?
Yeah.
Good. Do you guys realize how different you are than when you first started in this place? This is night and day. It's really cool. It's nice. Okay, you actually do stuff. Cool. Okay, and then the ending? How much? 58?
Yep.
And how much did we retire when we sold that asset? 6. What must depreciation expense be? $22. It is, isn't it? Yeah. Sound familiar? You bet. What was beginning accrued liabilities? They have a balance sheet, right?
Didn't give us that. Accrued liability, they don't have that.
Accrued liability, they don't have any accrued liabilities? That's impossible. Where are they? Oh, they don't have accrued liabilities. How'd they pay for all their operating expenses? Cash. This is the most unrealistic business I've ever seen. Okay, so they don't have accrued liabilities because the beginning balance is what? 0, and the ending balance is 0. So I guess they don't do that. Instead, what they do is they just credit cash. So you tell me what the credit to cash must have been. Debit operating expense is $250. Credit accumulated depreciation 22, because that included depreciation. Credit allowance for doubtful accounts 2, because that included bad debt expense. So what's the credit to cash, everybody? It's ridiculous. Okay? How much is it?
226.
Whatever their number is. 226. It worked, didn't it? So you could have done it that way, although I guess it'd have to occur to you there's no such thing as accrued liabilities. There's also no such thing as prepaids in this company, huh? What would you do in real life? You use prepaids and accrued liabilities. By the way, on sales, what else would we have to pick up besides accounts receivable? There's cash sales, there's credit sales, and there are payments you receive in advance, deferred revenues. So you could be either earning deferred revenue, reducing it, or you could be increasing deferred revenues. So you'd have to include that too, right? Unearned revenue, accounts receivable, and sales and cash all go together. They have no unearned revenues too. Let's try to keep it simple. Okay, that's a little too simple. Okay, good. What did you do for income taxes? Exactly the same thing? Well, you didn't do it yet, but what would you do for income taxes? I think exactly the same thing, don't you? Let's give it a shot. What do you know about income taxes? I want cash going out for taxes, right? So tax payable, by the way, could you have prepaid taxes too? Yeah. Okay, and then we have tax expense, and then we have cash going out, don't we? So what do we start with in tax payable? They did give you that? So we owe 10 to the government at the beginning. What do we owe them at the end?
12,000.
Good. So it looks like it went up by 2. What's our tax expense? Income tax expense. 45? So that's debit tax expense and credit tax payable. So how much cash went out? This would be debit tax payable and credit cash. That's 45 there, you guys. Yesterday I lost it, the day I broke it. Okay, so what's that, 55 less 12? 43. So they show 43,000 up there as the cash that went out. It'd be debit, tax payable, credit cash, right? And sure they do. So then we got the net cash provided by operating activities. But you can imagine where you have lots of different accounts, right? Just list them, okay? Is there more information there than if you just showed the change in the accounts? Yeah, a little bit. What do you think? Could you calculate that information for yourself if you knew the beginning and ending balances in all the accounts? Right? None of you have all the information in balance sheet. So if you do it, you give you enough disclosure. So that's what that looks like. In part B, what would we do? This is that indirect method, huh? Company name, cash flows for the year end, at least they put it on that time. Cash flow from operating activities, you start with your net income. What are the adjustments? That depreciation expense we found. Okay, now what's the gain on the sale of investments? Where does that come from? And why did that not show if we used the direct approach? Because that's non-operations, right? What's going on? That is a what? I'm
I'm selling long-term investments here, right? So that 67 included a gain of 15 that I don't want to show here in operations. I want to show that 15 gain down in investing activities, right? Okay, so sale of investments, 35 plus 15, what's that? The investment went away by 35 plus the 15 gain. I must have sold it for what? 50. That's what they're doing there. That makes sense? Again, we can do T accounts if you want, right? If you need them. If you don't need them, don't do them. If you do need them, do them. What do I have? I have an investment account. What did it start at?
85,000.
What does it end up at?
50,000.
How much?
50,000.
How much did it go down by? 30. Did they buy any? I think they said they didn't, right? Must have said they didn't. Okay, so 30 reduction is credit investment for 30. True? Just if you, I know you know these entries, guys. Let yourself use them. Okay, I must have debited cash, and then I either debited or credited a gain, didn't I? But I know from the income statement I have a gain, don't I, on the sale of investments? How much was it?
15.
So how much cash did you actually get? So there's your 45. All they did was they added together the 30 and the 15, and they got the 45. Everybody see it? That's where that 45 came from. Wait a minute. They said it's 5?
Yeah, it says investments that cost 35,000 per sold.
Well, they cost 35 were sold. And they have a gain of 15. Oh, I made it too simple. Okay. So it cost 35 and they sold it, and they started at 85 and they ended at 55? Oh, that's where they get the 5, sure. Something else happened, right? Sorry. So it started at 55. It ended at 85. It went up by 30, right? And what they sold cost 35. Sorry. And we have a gain of 15, right? So, read the problem, Keith. Obviously didn't. Okay, so this was 35. So that makes this one 50. So there's cash coming in of 50 from selling investments. There's the sale of investments, 50. But we also had a purchase. How do we know that? If you took 35 out, you start at 55, you take 35 out, what's left? 20, and somehow at the end it gets up to 25. How much goes in, gang? 5. Okay? So we must have purchased 5. Got it? So I kind of like to use the T accounts if I actually read the problem. But I like to use the T accounts because you pick up both pieces. Here the purchase and here the sale. And we assume this journal entry is what if they don't give us anything else? Debit investments and credit cash. Assume we pay cash for it. Okay? So we're showing both the increases and the decreases in the non-current stuff by picking up that 5 and the 50. You guys agree with that? We already did the sale of equipment before, didn't we? And we did the purchase of the equipment too, didn't we? Right? So I already picked those pieces up. All right, there's the loss on the sale of equipment. There's the gain on the sale of investments. Why do we add back losses? So make sure you have that clear in your head. Why are we adding back losses and subtracting gains?
So we want to show that.
We don't want it here, we want it down here, right? So all I've done is I've taken this 15 out of that income because that's not operations, and I put the 15 down below, included where? In the sale of the investments. It's in there, right? The gains included in that because I want the full amount that was cash coming from that. Make sense? And then the same thing on the equipment. The loss on the sale of the equipment is 3, so I'm going to add that loss back because it's too low by that loss because I want to put it down below. And that 3 is included where? In the proceeds from selling, right? Pick it up. That's all. And then they have the increase, decrease in all the current assets and current liabilities, and you're there, huh? If I would do a cash basis financial statement, what would I show as my net income, cash basis? 48. That's all we're doing. It's converting from accrual to cash, right? There's accrual, there's cash. All right, I guess we did all those. What about the loss? Oh, by the way, did you have a gain or loss on retiring stock? Sure. And we handle it exactly the same way, right? The gain or loss would get adjusted back out, subtract the gain, add back the loss under operations, and then that would adjust our cash flow under financing, wouldn't it? You pick up that too, okay? And then the payment of long-term notes payable. Do we borrow anything on long-term notes payable? I don't see any, but what happened to notes payable? Long-term notes payable. They went up by 8, and it doesn't say they retired. So what do you got? Just one way, right? They must have issued long-term, or whoops, they must have paid long-term. They went down, paid. Okay? And then the issuance of the common stock thing, same thing, right? Did it go up and go down both, or just go up? Oh, it's a little more complex. I like this one a little bit. Okay, well, I like this one better. We get a little bit. Common stock was issued in exchange for land. Huh. What happened to land? 15. What did common stock go up by? 50? So I have land goes up by 15. Common stock goes up by 50. And of course, there'd be additional paid in capital in real life, right? Okay, what's the difference here? What must have happened with that? Seeing as they didn't tell you anything.
Drop the cash, I heard.
I guess we got cash for that. Right? So what do? We show 35 issued for cash, and then what do? And this is different than we did in principles, isn't it? In principles, we just pretended everything was for cash. Well, in real life, of course, it's not. We issued common stock for land. So this is a non-cash investing and financing activity. You see it? So I've got 15,000. So at the bottom of the statement, you do another little section for non-cash items. What if well, this gives they issue stock for land. So it's debit, land, credit, common stock. There's listed at the bottom, right? What if I bought a building and I issued debt for it? Non-cash, purchase a building for the issuance of debt, right? Just listed and list what the amount was. That's it. Got it? No matter what it is, it's a non-cash item. What if you exchanged assets? You do that too, right? I got one asset, gave up another asset. I traded assets or something. Okay? So any non-cash things you have going on would go down here, and there might be several of those. So watch for those. Right? They say it was an exchange for something else. That's all that is. Okay? Not a very big deal, but that's new for us. Okay? And then I guess I didn't do cash dividends paid. How do you know what cash dividends paid are? What would you do for that? Yeah, I think so. You just do retained earnings. Okay, what's beginning retained earnings? Okay. What's in?
92.
How much?
92.
Oh, looks like their dividends are more than their income, right? Or they had a loss. Well, we know we had net income. How much was it?
66.
They must have a lot of dividends, huh? Either that, or you could have prior period adjustments too. You gotta pick up those too, right? Okay, the impact of that. Okay, so what must have happened? Must have paid out quite a bit of dividend, did they? 70 grand? That's it. Debit retainers, credit cash. So you got that one. Okay, so they paid out more dividends than they earned this year. We pick up everything? Huh? Well, you know what? If they're really earning a nice profit, though, what was their income on the sale? It's not a real company. How much was it? 67,000 net income on 950 of revenues. Not too shabby, depending on the business they're in, is it? Would you rather they grew or give you the money? Oh, so do you really want them? What are you doing, you guys? You know, maybe as 100% shareholder and they're retired and they're just milking the company. Right? Get the money out. Okay. It's okay. Yeah, it's your business. Right? Might be killing it though. If I was a shareholder, I'd want. When do you want to do this? When they think I could do more with it than they can for the same level of risk. When do you not pay it? I can earn more than my shareholders can for that level of risk, and include transaction costs, right? If they pay me a dividend, I have to do something with it. I buy some other stock. It's just annoying if I'd rather they kept growing. But
But at some point, you know, you're Microsoft a while back, you're Apple, and what do? You get more products that can generate the same return, you know, so what do you end up doing? They did, they did, they did, right? Or buy other companies. So, although buying other companies is trying to generate the same returns you've been generating, right? That's kind of fun stuff. Huh?
Did we do everything on that?
This is easy or what?
Are you getting started?
I don't know how good. Here's the deal. What I would do is I would just have in my head what the statement's going to look like. And I would go ahead and I would write down, just like we did in principles, with the company name, statement of cash flows for the year ended. I would do half the page, start at half the page, cash flow from investing. Then go down about half the page, write down cash flow from investing activities, go down to 3/4 of the page, write down cash flow from financing. Then I would go find my beginning cash, my ending cash, and I'd write down my answer way down at the bottom, leave a little bit of room for non-cash items in case you have some, right? And then I would just start analyzing the balance sheet wherever you want. What do? If it's indirect method, take the differences in all the current assets and current liabilities, for crying out loud, write them down under operations, right? Write down net income or net loss. If it's a loss, please put brackets around it, of course, because it's less cash with a loss. And then start looking for, as you go through each one of the accounts, now you find all the non-cash items, right? Gains and losses and depreciation, amortization, okay? Right? And as you go through the descriptions, you have to go through all the descriptions that are given to you to find the non-cash ones. And then just analyze account by account. I've already known all the current assets, current liabilities, what do I have left? Non-current assets, non-current liabilities, and equity. Go through account by account, make sure the change goes on that statement once and only once. And when did we use T accounts? When you couldn't just see it otherwise. When do you not use it? When it's a waste of your time. Right? And what will happen if you discipline yourself, by the time you're at the bottom of the balance sheet, you're done. If you're out of balance, when you're done, the cash flow doesn't add up. Divide how much you're off, right? What the change in cash should be compared to your change in cash when you add them up. Take the difference, divide by 2. What am I looking for? I didn't put brackets around something I should have put brackets around, or vice versa, right? Also, when you get that balance, if that doesn't work, divide it by 9. Always do that. When you, on a balance sheet, if it doesn't balance, do that. Same thing, it's a debit as a credit, or a credit as a debit, right? You divide by 2. What if you divide by 9? What do you find? Transpositions. Those are the 2 most common things to screw up, right? The other thing you can do is you can take that amount and say, what account did I not do? But you go back and skim through and say, okay, what did I do wrong? Here's one thing I would discipline myself to do. If you're gonna write this net income down on the statement, be sure and do the dividend at the same time. Do them at the same time. Try and discipline yourself to do that, because what's the danger you have? You put down one, not the other, and you don't know where it's at, right? It might jump out at you, might not. The other mistake people make is they'll put this 3 down, the change here, and then they'll put down the 70 and the 67 also. What? Don't put the change down and then put the 2 changes that are in, make up the change too. That's absurd, of course, right? So that mistake's very common, right? These are 3 points. You know what's really awful about it? Is it comes at the end of the principles book. What happens in most schools? They don't get there. Oh no. It's at the end of the intermediate book, and they try to do this book in 2 classes. What do they do with this chapter? They don't cover it. So we already did the principles. No, they didn't. And then they say we already did it in chapter 4, or 5 it is, I guess. I did it today in chapter 5. How much time do we spend there? None. So they don't really do it. You guys got to make it. Right? So you're welcome for an easy chapter. Go ahead and read the next chapter for next time, would you? It's on the quiz anyway, isn't it? You did read this one? Yeah, and we'll have a little bit extra time on the other one. Okay. The next chapter is, there's a lot more in full story. Yeah. Finishing this book. You're going to start a different book. But go ahead and read the chapter for next time if you would. We'll talk about it, okay? So, we don't have a quiz next time, do we? Oh, we don't have quizzes. When are the tests? After this chapter?
July 5th.
Oh, that's right, it's right after that, yeah. Well, it's due July 5th, it's a take home, isn't it?
Yes.
So you have a whole holiday weekend to do it.
Thank you so much.
Why would you gripe about that? You study the whole time?
No, we're gonna celebrate freedom.
Yeah, that's
Celebrate
Set off
freedom.
fireworks, have fun. Drink alcohol.
We're gonna make Trump president. I told some kid today that was in my principal class, that we're gonna make him president, so he'll really be a dictator in the system. You know, don't be giving him demeaning titles. I think it's gonna be God.
What is going on?
It's gonna be the deity. With what?
Just look, I'm not that old, but I feel.
Or politics?
Yeah.
becoming entertainment.
How did you get here? It's all about entertainment. He's an entertainer. I like their budgets for the campaign. It's pretty funny. I'll spend my own money to be president. I'll get it back later. Yeah, okay. Yeah, we got that one. See you guys. That's fun. Laugh or cry, I guess, huh?
Both at the same time.
Okay, so I have no idea why that went away on me. And you just open it up in here. And I minimized it too.
I had to close out PowerPoint first,
And got back in, but I already did that once.
so I don't know what it was.
Okay.
PowerPoint said,
I'm gonna try, okay, I'm gonna save this.